about stocks this week. The market's correct on Friday in reaction to global news. Is this an opportunity to buy or is the honeymoon over? Our investment advisor Sharmila Joshi tells you why you should invest in AIA Engineering for the long term. And Sharmila has made a profit of 32% on her portfolio. We'll tell you how she did it. Welcome to All About Stocks. This is a show specifically meant for long-term retail investors. Now, we had a bit of a rough week at the markets, especially with the rupee. We saw at the beginning of the week the RBI's policy meet was a bit of a non-event, but larger global issues are weighing heavy on the markets right now. And over the next half hour, we'll tell you what your investment strategy should be and which stocks would give you the best returns over the long term. We'll also answer the questions you sent in during the week. Now remember, our email ID is at the bottom of your screen and you can also reach us on our Facebook page. And we'll start by bringing in my colleague Ajay to give us an update on all the market action. Ajay.
Well, another damaging week for Indian equities this time round. We've lost about 1% each on the Sensex and the Nifty. In fact, losses on the Bank Nifty have been pretty accelerated at touching 2.5%. Confluence of factors weighing in as far as Indian equities are concerned. Global worries, of course, continue to pose a big concern, especially Ukraine and Gaza. Kind of issues indicate probable war zone-like scenario there, and they're making global investors extremely jittery. Not only Indian, but global equities weighed under that pressure. But even the RBI policy, though, was on the expected lines and infused some liquidity into the system by SLR cuts. By one section of the market, the commentary coming out of the RBI governor seemed slightly on the hawkish side. The rupee took a big toll because of global jitters. Data coming out of Italy, Germany, all weighing in as far as the economies are concerned, leading to a sharp rise in dollar index, and the rupee sank to almost a multi-month low. That did not go down well as far as Indian equities are concerned. So right now we are clearly in a middle of in a strong bear grip as far as Indian equities are concerned. Mid caps taking a bigger toll than the large caps. However, now being in the last leg of the earnings season, even the momentum from first quarter earnings season seemed to be ebbing out, and that could not really cushion the fall in the market which we saw. Traders, however, see that we are in a corrective phase right now in an overall bull run, which may last a couple of weeks more. They expect Nifty to fall to around 7200 to 7400 zone in the medium term, and are advising traders to be cautious, very strict with their stop losses, but investors to be eyeing that particular stocks which you always wanted to buy on correction, and so correction here is, but buy with a long-term time horizon.
All right, Ajay, thank you for that update. Joining us today is Sharmila Joshi, who's been an advisor with us now for several years. Sharmila, I want to ask you this first of all. We've been waiting for a while for a cut in the market to give us an opportunity to buy. But if we look around right now at what people are saying about this government, what people are writing about this government, both globally and domestically, there seems to be a sense of disappointment. Are we disappointed because policy is not moving as fast as we hoped it would be? Is that how the market is seeing it as well?
Oh, I mean, yes and no, because yes, certain things have been a disappointment. I mean, you heard a lot about the insurance bill, and then you saw it getting stuck in the Rajya Sabha, and I really don't see any reason why things should really move faster there. So yes, I think in a sense some reality has
and it's now been referred to a a parliamentary committee, which is exactly what the previous government would have done. So technically nothing really has changed.
Yeah, nothing changes, and I think that it's proved a point that it doesn't do really well to get carried away by that the kind of euphoria that you saw when the Lok Sabha results came out. But that said, I think there is a definite sense, because this government does have a majority, and maybe yes, it could take a little longer than what they had anticipated in getting some key issues through. But I think that they will manage to scrape through at the end of the day. And we do have state elections coming up, so I'm sure that even the opposition wouldn't want to be seen as really being too obstructionist in the long term. So yes, I think we seem to have hit a roadblock. A lot of the prices of stocks have also run ahead of fundamentals, and I think that's the key reason why perhaps you see sort of markets getting range bound or correcting, because on the one hand you had this euphoria, and on the other hand you had sort of prices getting way ahead of themselves. So somewhere that situation had to correct. So it was almost as if market was looking for an excuse to sell. So whether it was what happened in Argentina or the developing situation in Europe or what's happening in the Middle East, everything sort of seemed to add, especially I think globally, probably globally things were more inflated than what we have in India, simply because in India I would still say it's a bull market. So the multiple, if you're looking at it, the PE multiple of the Sensex, if you're looking at it from a bull market perspective, then it's still within range. You know, it's not that it's out of whack.
Yeah.
But globally, yes, certainly, I think in the US there was, it did warrant some more correction and they did get that. So I think perhaps we will also see more, but I would still look at it as a market really to buy on dips rather than to sell into.
All right, I want to ask you this now. Obviously, since the time we had a new government in place, sectors like infrastructure, real estate, power, banking galloped away because we expected policy to start moving very quickly in all of these sectors. That has not happened for any of these sectors really. If we see real estate, for example, sales have not been what realty majors expected it to be when the government turned. We've not really seen anything happen concretely in power or in banking right now. Would you say that where these stocks are at this point, if any of us are holding these stocks in our portfolio, it might be a good point to get out at this thing? Is there more disappointment to come?
See, if you only bought the stock thinking that lot is going to change on the policy front, then yes, maybe it's time to sell. But I think the reality was that in a lot of the stocks, especially in the infra space, and especially I think even in the banking space, we can discuss real estate separately. But definitely within the infra space, a lot of the the stocks which are under stress were showing that they were in a trough and they were sort of getting out of it. So they were taking great cognizance of the fact that they had over leveraged books and they were trying to cut down on debt. Similarly with banks, I think they had woken up to the fact that they can't really allow NPAs to gallop away like that, and they were becoming far more stringent about norms and calling willful defaulters as the tag was. So I think they were becoming more, cognizant of the fact that they can't allow the same situation to continue, and the results are also beginning to show that somewhere NPAs weren't increasing at the rate that they were. So it might take a couple of quarters for banks, and it might take a couple of quarters for infra. But I think even if things don't change, things will improve, at a balance sheet level for both these sectors. For real estate, it's a little murkier simply because I think there's a lot that we don't even in terms of valuation also we don't really completely understand. How real estate companies are doing it. But in terms of budget, I think possibly most positives came for the real estate because of, the REITs, etc. So maybe, that could be viewed as a positive.
Let's take a few questions. Kapil has written in, he has 70 shares of Sun Pharma, which he bought at 575 rupees. He's wondering if he should hold on to it any further. Sun Pharma ended the week at 760. Hold on to Sun Pharma?
Yes, I think so. I think there was a little bit of concern over the Taro results, etc. But I think the fact that, that they are going to be merging with Ranbaxy will prove out to be a long-term positive for Sun Pharma. So I think if his investment horizon is like a year plus, for me, Sun Pharma is a definite hold.
Well, Babu has written in, he has 1,200 shares of BHEL, which he bought at 286 rupees. He also has shares of Walkart, which he got at 650. He wants to know if we should hold on to both of them. Let's talk about BHEL first. We had a little chat about infrastructure. BHEL actually didn't turn around as much as L&T and the rest of its peers. What should we do with BHEL right now for any of us who are holding it?
So I think it's exactly what I said about L&T. I think it's a buy on dips kind of a strategy that I'd use for BHEL. So I think he's bought at 268 or something. So I think the current price offers him a good sort of a level to average the stock. So I would really say buy 50 at this level, wait for the markets to correct. Maybe you will get it 3-4% cheaper, buy it then. But definitely hold on to what you have. With Walkart, it's a little more tricky, simply because I think with pharma, there's been a twofold kind of an hit. One has been this whole regulatory hit, and one has been, issues within the company itself. And I think Walkart is more hit because of the regulatory issues than anything else. So you need to keep an eye on the ground as far as, that is concerned. And the stock did really appreciate almost, I think, 4 to 5 times from the levels that it used to be at. So even that becomes a bit of a dampener. But it's a hold for now, but I would really, keep an eye on the news flow as far as Walkart is concerned.
Let's take another question. Shailesh has written in, he has 10 shares of M&M, which he bought at 1,000 rupees, and 100 shares of Asian Paints at 515. He wants to know whether he should hold on to it. Now, M&M is in your portfolio, and we saw it do really well. It was up about 4% across the last week because of strong numbers. So obviously, you're holding on to it in your portfolio. He should hold on to it as well.
I think so, and I think that the heartening thing in this result was the tractor EBITDA, and that's been a bit of a concern for M&M. So to my mind, it's as I've always said, it's a 2,000 rupee stock. That price will come with time. But both these stocks, I think both M&M and Asian Paints are both really, really the blue chip quality names. And definitely, I think you should hold on to them.
All right, hold on to it. Now it's time for us to take a look at Sharmila's own report card. Now, Sharmila recommended Tata Motors DVR in December last year when it was trading at 200 rupees with a target of 240. It's currently at 295. It has, of course, handsomely crossed the target. So thank you for that recommendation. But for those of us who bought it when you recommended, what would you like us to do with it now?
See, what's fortunately happened with Tata Motor DVR is, I mean, one of the logics for buying it was that it traded at a huge discount to the Tata Motors price. And so while Tata Motors price went up, actually the DVR price went up more. And that gap, that valuation gap that existed between DVR and Tata Motors main share actually closed. And the stock had in fact even, I think, gone to levels of 315, 320 if I'm not mistaken. So that would really be my, new target. And I think Tata Motor numbers are next week. So in that sense, it's like the perfect time to really hold on to it, because I think again Tata Motor numbers, especially from the JLR front, are supposed to be quite good. So let's wait for that. And I mean, I really don't see any concern with holding on to the stock, unless you really need the money for something and you want to sell.
All right, since we're talking about these large stocks, let's also very quickly, I want to ask you about SBI. Given the numbers that we saw come out, the fact that it did, of course, beat expectations from the street, what is your call on SBI stock? And I can tell you that almost every viewer who's watching right now possibly has SBI in his portfolio. What should we be doing with this stock?
Yeah, including me. Numbers are, I think, a beat, as you said. And, this is, in terms of NPAs, this is, as the management said, their worst quarter. So I think the sense seems to be that you could be another 2, maybe 3 quarters away from really seeing improved numbers from SBI, but I think they're sort of on the path, and I think
is it worth it to wait those?
So
yeah.
Yes, I think it's worth
it's worth the wait. All right, so we're going to look at that portfolio in a little while, and we'll talk about Sharmila's own portfolio, which has SBI in it. But right now, I'm going to take her recommendation. She's brought one recommendation in for us this week, and that's AIA Engineering. It's ended the week at around 772. Sharmila, tell us why this particular stock among all of its peers. Also, why you're looking at a mid-cap at this point. And if we look at the stock, now if you put up on your screen right now, it's up about 165% over the last 1 year. How much more of a run-up are you expecting from this stock?
So I think that's a good case in point, that the stock is up already 165%. So it all depends on what level you got into the stock. But I'm still looking at a level of 900. And why mid-caps? Because I think, that's really the space to be in. Because I think the outperformance in terms of numbers can only really happen there and reflect better in stock prices. So coming to AIA Engineering, it's in a very niche space. And it's a very specialized kind of a company with an international presence. So this is not a domestic story per se. This is not a stock that is depending on any great domestic recovery. And they supply largely to cement and mining companies. And they're providing them solutions which sort of make improve the cost efficiencies of the company. They're providing them with grinding products that are used in grinding. And of course, the orders come because there is a certain wear and tear in parts, as well as the new capacities coming up. The company is also increasing its own capacity. So I think, that's going to be the kicker, the sort of that will drive the story going forward, because they're going from 3,000 MT to 440,000. So I think that's going to happen over the next year and a half, and they sort of seem to be on track to do that. So I think they will end FY16 with an EPS of closer to 50. So, giving it a discounting of about 18 times, which is what good engineering companies normally get. So we are looking at a target of 900. So I think it's I'm not looking at a target which is completely out of whack,
right,
if they sort of proceed along these lines.
All right, so that's Sharmila's recommendation for this week with a target of 900 rupees. Remember, every time she comes back into the studio, we take a look at the recommendations she's given us previously and we see how they're doing. We're going to take a very quick break. When we come back, we'll take a look at Sharmila's portfolio. We'll tell you how she managed to beat the market. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you so much for staying with us. Sharmila Joshi is with us as well. She's helping us figure out a strategy for our long-term stock portfolios. What we're going to do right now is going to take a look at Sharmila's own portfolio. She designed this portfolio on the 21st of December in 2012 on this show. We've been tracking it ever since. It's currently at an overall gain of 32%. Now let's compare that to the Nifty, which over the same period is up 29%. So we are outperforming the market. What I'm going to do is I'm going to give you a list of stocks in this portfolio. There's L&T, IDFC, Godrej Industries, Hexaware, Ipca Labs, JSPL, Kajaria Ceramic, M&M, SBI and Jindal Steel. Well, Sharmila, the last time we spoke, L&T was up much more than what it is. It has come down about 30% since then. It was well up over 100%. Are you slightly disappointed that you didn't book some profits?
Yeah, I think in a way this the whole portfolio building exercise has also been, in itself, I think it can teach people many things, because as you said, we designed this portfolio almost 2 years back. And you're looking at the returns Nifty has made from then, and you're looking at, and I think maybe I made changes, I think once or twice. So, but I think it definitely means that we should be more active with our portfolios, and sort of, if you have actually bought this portfolio, you should have been adding at levels also, or booking profits as the case may be. I'm not really. I don't really repent booking profits in L&T, but maybe I should have made some other changes, in some of the other stocks along the way. Because as I said, in L&T, I would really, in fact, if I was an investor, I would actually buy more at this price. Okay. I would actually, whatever surplus I would have, I would actually put in stocks like L&T. I mean, that was precisely the point. We bought at levels below 1,000, and what discounting it was getting then. Yes. Which was ridiculous for a company
of that size.
Of that size, and with the kind of market share it has. So I think I'm comfortable even averaging it at this price, so I'll certainly hold on. I think my disappointment would be in some of the mid-caps, which haven't really done too well, like a Godrej Industries or a Hexaware. Yes. I think perhaps, the call would have been to sort of shift out of those and get into something which has possibly, like a Kajaria Ceramics on the other hand has given fantastic
returns. Actually, that was going to be my next question to you. It's up 160% since we bought it. Now do you want to book profits in Kajaria Ceramic?
No, I want to actually get out of Hexaware, because I didn't like the results, and I don't think that this mid-cap IT space is going to do much. So I would actually ideally exit Hexaware and maybe even Godrej Industries, and I would buy a Dabur at this point with the money.
All right. We saw M&M move up quite sharply, obviously. We talked about that a little while ago. Would you be, for someone who's watching right now, would you recommend that they be adding M&M, IDFC, all of these other stocks every time they get an opportunity as well?
I think so, because I think M&M numbers were good. So suppose you get a correction, because markets seem to be in a mood to correct. So suppose it comes down below 1,000 levels, then definitely take it as an opportunity to average, simply because the numbers are good, So I think that you can easily, with the kind of earnings they're likely to have, you can easily see levels of 1,400, 1,500 if market improves a little. So I think that you can definitely look to average M&M if it comes below 1,000.
All right, so we're getting out of Godrej Industries and Hexaware. What would you like to buy in their place?
Instead of Godrej Industries, let me buy a Dabur. Okay. And instead of Hexaware, I think I'll buy a Syntex.
Okay. And is that because Dabur right now had better numbers than Godrej Industries, or is there a larger reason why you want to make that change?
A larger reason would be that I would expect actually Dabur to give you the kind of returns Godrej Consumer has given. For the longest time you saw Godrej Consumer stuck at that 400-500 level, and now it's at 800 levels. And I think Dabur is sort of following the same, strategy where they've done acquisitions, and they're trying to grow both organically and inorganically.
And what a lot of people don't know is Dabur does have insurance holdings as well, that they might profit from the insurance.
Yeah. So I think overall, even just looking at their FMCG business, I think they would be on a faster track than Godrej Industries. I mean, Godrej Industries is a bit of everything. It's still a great company. But I think that in terms of returns, we might do better if you're looking at it from a year plus perspective, we could do better with a Dabur.
All right, I'm going to give you a quick recap of the stocks in Sharmila's portfolio. There's L&T, IDFC, Dabur, Syntex, Ipca Labs, JSPL, Kajaria Ceramic, M&M, and SBI. If you have any questions about that portfolio, feel free to write to us, and we'll ask Sharmila to come back into the studio and answer your questions for you. Let's take a few more questions from our viewers. Srinivasa has written in. He has 500 shares of GMR Infra at 32 rupees. He wants to know if he should sell that stock. It ended the week at 26, and this is, half the time we can just pick up what the sentiment is by looking at our inbox. We're starting to get more and more questions about infra stocks again. Should I sell? Should I sell? GMR Infra.
In fact, I'd recommended this, and I think it went up all the way to 30 plus levels, and it's back at 26. So I think my reasons for liking GMR Infra stay, they are sort of bringing down their debt substantially this year, and their power projects are in a much better position than a lot of the power projects of a lot of other companies. I think my only concern is that perhaps they are trying to capitalize too much on a good market and to raise money, because I just read that they could be raising money for their airport business, etc. Though of course the airport business is actually more stable than the power business. But I think yes, I stay positive. I would have a level, a target of about 32, 34 on the stock. So at this price, I don't see really any reason to sell. Maybe if it comes down more, he could look to average.
All right, let's take another question. Ramesh Krishnamurthy has written in 50 shares of Kane India, which he bought at 315 rupees. Should I hold on to it? Kane ended the week at about 311. Now, obviously, there are concerns over the money that was lent to Vedanta. It's a grey area of ethics, really, more than anything else, and some sort of corporate governance issues. But on the larger scale, given the fact that he's currently at part of where he bought, would you recommend he holds on to that stock?
I don't think so, because I think that this is not a grey area. I don't think it is something they should have done without really sounding out in their investors first, or at least talking about it. This has definitely not gone down well with me. And I think secondly, the way crude prices have been, because I think Kane ultimately almost tracks the price of crude. If you look at the graph of how crude is moving and how Kane prices have moved, it's almost a mirror. And in that sense, we seem to be entering a phase where crude prices are sort of cooling off, or they're in that range between 104 to 110. So there again, I don't see too much of an upside. So I think that since he's not losing too much money, just exit it. And I think maybe even if you were to buy if you wanted to be in the same space, I think you should buy an ONGC or even a Reliance at this price. I think you will ultimately make more money.
All right. In fact, let's take a look at one of our portfolios from our viewer. Every week we pick one lucky viewer and we take a look at your entire portfolio. This week, our lucky viewer is Shashi, who sent us a list of stocks. And I must tell you, it's a very interesting list of stocks because he includes HDIL and Kingfisher in this list. I'm surprised anybody's still holding on to Kingfisher. But let's start at the top. 300 shares of NHPC bought at 28 rupees. Hold on to that stock?
Yeah, I think so. I think that at this price, there's no point in selling. My target would be closer to a 28, 29 kind of a level. So I think for now, it's a hold on NHPC.
We also has Bharti Airtel, which he bought at 354 rupees. He's not making too much of a profit. There's no lot of margin over there. What should he do with that stock?
So I think this space is also going to be a bit of a slow mover. So I would give this a target of about 390. So I really leave it to him. I think you can exit, especially because markets do seem to be correcting. So maybe you could sell that and buy something else, which is slightly more high beta. But as stocks go, I think it's a decent stock and you can continue to hold it.
50 shares of HDIL bought at 250 rupees. Now we know HDIL ended the week at about 93. He really should cut his losses, shouldn't he?
I think so. I think there's, we were talking of the real estate space earlier, and here, there is a lot of concern in the sense, how leveraged books are and, how really people are going to structure their assets to really get out of all that. So I think the one company that has made great strides in really reducing debt is Unitech. So, and they had a lot of other issues and those are also getting sorted out. So I think if you had to be in the real estate space, you could look at some of the South-based real estate companies, or you could look at a Unitech, or ideally I would say go for a proxy and go for a housing finance company. So buy an LIC housing finance or something of that sort.
He has 100 shares of Kingfisher Airlines, which he bought at 10 rupees, which is now at 3 rupees. So he's obviously one of those people who bought it at 10, assuming it will go up, or someone will pick up this airline, or someone will. Oh, that's not going to happen at this point. Should he even bother holding on to it?
No, I don't think so. I think you should just exit it. I mean, take whatever you're getting and be happy with that, really, because I don't see it going to 10 for a very long time.
But he also has Syntex, which he bought at 150 rupees. It's at 80 right now. You just recommended it in your portfolio. It's possible that he got in at the wrong point. What would you recommend he does at this point?
So I think this is again another case in point about what we were talking of in Midcaps. This stock has actually moved from 27 levels to about 115 level and corrected to 80. So what's happening is that you are actually seeing an improvement in numbers in Syntex, and the stock price sort of ran away ahead of itself, and you saw it go up to 115, and since then sort of because people may have bought at 27.30 also, so they're all like booking profits and getting out, which is always a wise thing to do if you've gotten it in that cheap. But my target on the stock would be closer to 150 levels. So maybe since he's bought it at 150, he's not going to be, which must have been 2 or 3 years ago, he's not going to be in a hurry to average. So let him watch it a little and then take a call if he sees markets improving, overall sentiment improving. Numbers for Syntex again weren't bad this quarter. So I would really recommend that he hold on to what.
How long is he going to have to wait before he sees 150 again on this stock?
I think at least a year.
At least a year. All right. So there is hope there. You hold on to Syntax and you might see 150 again in a year. Unfortunately, we've run out of time. Sharmila, thank you so much for coming in and answering all of our questions. Keep sending in your queries. You can reach us on our Facebook page and you can reach me on Twitter. Thanks so much for watching.